So this is the #1 real estate market to invest into in 2021. It has everything you would ever want. It has growth. It has investment security. There's a housing shortage. And on top of that, it's a big city. Like, this shouldn't be allowed. I don't know how this combination of things is allowed to exist, but this market has it. You want to make sure, whether you're buying a home or investment property, that it's in this market in 2021. How's it going, everyone? This is Nick. I'm back here with another ReVenture YouTube cast, and I'm really excited about today's episode because I'm going to show you guys the 5 best cities for real estate investment across the US in 2021. That's right. So whether you're a home buyer or an apartment investor, you're going to want to watch this video to find out what the data is saying about the best places to invest in real estate right now. And before we get into the list, I want to give a little background on the methodology and the data behind this list. So ReVenture Consulting has developed a model which I call the holy trinity of real estate investment. And if markets do well in this holy trinity, they are good markets to invest in. So what is the holy trinity? Well, the first aspect of that is growth. If a market has good job growth and good population growth, well, it's probably going to have good long-term price and rent appreciation. So you want a market to have growth. Now, there's a lot of markets with a lot of growth that are still bad areas to invest. Now, why would that be the case? Well, the second thing is security. You want to invest in a market that has durable, long-term jobs that are not just going to decline immediately if we hit a recession. And you want to invest in a market where values are fairly affordable relative to incomes. If you combine those two things, your market is secure. And then the final piece, the third thing, is housing shortage. If your market or city is producing a deficit of new housing supply, of new homes and new apartments, if you're not producing enough of those for how many people are living and moving in an area, well, that's obviously going to be good for real estate values and real estate rents into the future. So it's those 3 things: growth, security, and housing shortage. That's really the fundamentals of what informs this list. So let's get into it. So this first market we're going to talk about is a actually really popular growth market. It's located in the southwest area of the United States, and it's just seeing lots and lots of new jobs, new corporate relocations, new migration into the city. And this city I'm talking about is Denver, Colorado. So, this is going to come as a little surprise to most people who pay attention to real estate investment. Denver is at the top of a lot of lists, and it's highly desired for, real estate investment. Now, what makes Denver such a good city for buying in 2021 as opposed to others is not just its growth, but it has a major housing shortage. That last component of the Holy Trinity. Denver is simply not producing enough new homes and apartments for all the people that are moving into the city. And we can see Denver's housing shortage evidenced on this graph, which looks at the amount of permitting in Denver compared to some other growth markets across the southwest US. Over time. So we're looking back about 10 years here, and we're looking at the permit supply expansion. So the way to think about that is that, for instance, Denver in 2020 pulled 18,000 new permits for single family homes and apartments. Developers went and they wanted to build them, so they pulled the permits. Compared to 1.2 million existing housing units. So that's a 1.5% increase in housing supply. You can see here that Denver is actually, surprisingly, despite all of its growth, been permitting fewer and fewer units over the last 5 years. It peaked in about 2017 at 2% permit expansion, and it's just been going down since then. It's been going down even as the metro area keeps adding all these new jobs, corporate headquarters, and population. You can see that Denver's decline is very unique. It's evident that these other cities on the list, Phoenix, Salt Lake, Nashville, and Austin, all of these areas have actually seen increases in permitting over the last 5 years. If you guys are enjoying the data presented in this video, please hit subscribe down below. Also, please leave a like or a comment. If you're a home buyer, if you're a real estate investor, or you just want to learn more about real estate investing in general, you're not going to want to miss this content going forward. So again, please hit subscribe. All right, back to the video. And increasing in permitting makes sense, right? You more people move to a city, you build more housing for those people. But Denver's doing the opposite. And there's a variety of reasons for that. You talk to people in Denver, there's all these kind of anti-growth initiatives. Some of the cities like Lakewood, for instance, have capped the amount of new housing that can be built. And personally, I don't think that's a good policy for the city. But if you're a real estate owner or you want to buy in the city, it is a good policy because you're not going to have a lot of supply competition. So Denver is the rare high growth city that does not have a lot of new permitting. So when you can combine high growth with a housing shortage, well, that's a good combination for real estate values. So Denver, even though where we are in 2021, where values are high and they're escalating, Denver is a city I still feel pretty confident about buying into. All right, so this next market we're going to talk about is not nearly as popular and not nearly as large as Denver. However, it should be more popular because it's one of the best real estate investment markets in 2021. And this is a market that is really unique. It's like finding a needle in a haystack because it has this rare combination of growth in a secure economy with not too much supply competition. That's a winning combination for real estate investors and home buyers. What market am I talking about? That would be Chattanooga, Tennessee. So Chattanooga is located on the southern border of Tennessee, right next to Georgia. And this is a market whose economy has really just boomed over the last 5 to 10 years. It's a logistics hub. It's a manufacturing hub. Volkswagen opened their first North American plant in over 3 decades there in the late 2000s. They're expanding that plant. So there's a lot of really positive things going on in this economy. And as a result, it's actually quite simply the best job market in the U.S. right now. That's right, the best job market. And if you have a great job market, that of course is great for real estate. You're adding people, you're adding jobs. Those people are going to need a place to live. That pushes up real estate values. So yeah, I'm not joking when I say Chattanooga is the best job market in the US. So what we're looking at here is employment and jobs data over time in Chattanooga, as well as 3 other selected metro areas across the US. And we're looking at the decline and then the growth in jobs over the last year. So you can see this, we're going back to January 2020. And as you can see in March, there was just like a huge drop in jobs in all of these markets because of COVID and because of lockdowns. So, Chattanooga lost 13% of its jobs in April. Raleigh lost 19%, Austin lost 19%, Boston lost 23%. And then gradually all of these markets have started regrowing their jobs as the years have gone along. But Chattanooga is just outpacing everyone else. And as you can see, Chattanooga has actually added jobs year over year. It's one of only 3 markets in the US to do that. Out of 150 large metros, Chattanooga is only one of 3 to add jobs in 2020, which is really impressive. Plus 1.6% during a recession, during a pandemic. That's great for local real estate, and you can just see how that compares to some other select markets. So Austin, which is doing pretty well, has still lost 3% of its jobs year over year in 2020. A place like Raleigh has lost 6% of its jobs. A place like Boston has lost 10% of its jobs. So think about that in terms of when you're making your real estate investment decisions. Do I want to be in a market that's down 5% of jobs or 10% of jobs? Or do I want to be in a market that has actually grown jobs in the middle of a recession and pandemic? That says a lot. And this isn't a blip on the radar. For the previous 5 years, Chattanooga was also growing jobs significantly. And it's really one of the best, really relatively unknown, underrated real estate markets in the US. It's definitely one you should target if you're a home buyer or real estate investor. So the third market we're going to talk about is actually very similar to Chattanooga, both in its size and being attractive for real estate investment. And it's only an hour and a half drive down the road from Chattanooga. And this market we're talking about is Huntsville, Alabama. Huntsville, you might be saying, what's in Huntsville? Well, it's actually one of the top tech hubs in the US. NASA, the US military, Amazon's Deep Blue Space program, all have huge installations and huge research centers in Huntsville. So it's actually one of the top cities in the US for tech jobs. And when you have tech jobs, that's a great thing because those are high paying jobs. They tend to stimulate other jobs throughout the local economy. And all of that is, of course, great for real estate. So what we're looking at here is a graph showing the percentage of jobs in the local economy that are devoted to tech. So when I say tech, think software developers, systems engineers, computer science, heavy math type degrees. Those are tech jobs, and those are great jobs for an economy to have. So you can see here that the average city in the US or average metro has about 3% of its jobs are in tech. And we're starting at the bottom of this list, so you can see the ones all the way at the bottom of McAllen, Texas, Youngstown, Ohio have basically no tech jobs in their economy, and that's not really a great thing, especially in the 2020s. You want to have tech jobs. So as we scroll up this list, we're going to see more and more tech jobs, right? And now we're like kind of right around the U.S. average. You see like Orlando, San Antonio, Oklahoma City around 3%. But let's keep scrolling. Where's Huntsville on this list? Well, we got to keep scrolling up. We're now in the top 30. We're now in the top 20. We're starting to see some like pretty big cities: Dallas, San Diego, Columbus, Atlanta, Denver, Salt Lake City. Huntsville has more tech jobs in these cities. Where is it? Oh, here we go. Number 7 in the U.S. Huntsville, just think about that. Huntsville is the number 7 city in the U.S. in terms of tech job concentration. There's 14,000 tech jobs in an economy with 226 total thousand jobs for 6.2%, more than double the U.S. average. And just look at some of these cities that Huntsville is next to. Like Austin is over here. Boston is over here. Raleigh, San Francisco. Huntsville is swinging with the heavyweights in terms of tech, and that's tremendous for real estate. Stanford economist Enrico Moretti, he wrote a book called The New Geography of Jobs. In that book, he talked about how one tech job in an economy will add 5 additional jobs as a multiplier over the next 10 years. And the way that happens is that tech jobs typically are high paying. Those people spend money in the local economy, and spending money in the local economy creates other jobs. So when you think tech jobs, just think like tremendous job growth. And that is, of course, great for real estate. So if you're thinking of buying a home or you're thinking of buying an investment property in Huntsville, do it. So, all 3 markets we've talked about so far have really good growth stories. Like they have a lot of job growth. They have a lot of positive things going on. This next market we're going to talk about is a bit more, let's just say, like ho-hum. It's in the Midwest. It doesn't have a ton of growth. It has decent growth. But what it really has is value and affordability, right? So if that's part of the whole investment security dynamic of the whole Holy Trinity. If you're buying, at a reasonable price, especially relative to what incomes are in a certain area, it's going to be hard to go wrong, right? Like you're not going to lose much money if things go down, and there's a lot of room for things to go up. And so this market we're talking about now is Cincinnati, Ohio. And a lot of people, they don't like talking about the Midwest. They think it's a slow growth or a no growth area. And that's true in a lot of cities. But Cincinnati actually has had really good job growth over the last 5 years. It's weathered the current recession pretty well, all things considered. And it's cheap. It's affordable. So if you have decent growth and you're buying into an affordable market, that's a good combination. And we can see Cincinnati's relative affordability highlighted on this graph, which looks at home value over the last 15 years or so. And so this is data from Zillow, and think of this number as like the typical home, what the typical home is worth in these cities. And you could see that Cincinnati is at $206,000 for the typical home. And it really hasn't had like a ton of growth over the last 5 to 10 years. And you can also see that there wasn't much of a decline either during the housing crash in the mid to late 2000s. So this market has been slow and steady which might be boring for some people, but is a great thing, especially right now in 2021 when interest rates are at all-time lows and we're just seeing crazy home value growth. You want to be in a market that's slow and steady. It's a marathon, it's not a race. And you could see Cincinnati here compared to some other cities of similar sizes, like Las Vegas's average home value is $314,000. That's more than 50% higher than Cincinnati. Austin's average home value of $378,000. That's almost double Cincinnati. And then you have Salt Lake City, which at $428,000 is more than double. So, value-based investors who, want a good return on their capital and who want to invest into a city and a market that is unlikely to see much of a decline if the housing market goes south, well, Cincinnati is a great option for you. So, all right, the fifth and final market, I've saved the best for last because this next market is my favorite investment market for real estate in the US. It is number one in ReVenture's rankings, and this market really has everything. It's a large city, it's a secure city, it's a growing city, and there's not, amazingly, too much new supply competition. And this is just a really rare combination to find a city that has all these things, and it makes it a great place for real estate investment, home buyers, real estate investors. You should target Atlanta, Georgia. Atlanta has lots of strong population and job growth. It's weathered the COVID recession pretty well. But what I really like about it is despite it having great growth, it also has great security. Values are still affordable and incomes are growing a lot. And this combination of things makes it a really special place for real estate investment. And we can see how special Atlanta is on this graph. And here we're comparing two things. What we're comparing here on the x-axis is value to income ratio. So that's taking the typical home value in the city, dividing it by the median household income. And then we're looking at job growth prior to COVID. And let's just focus on value to income ratio first. So further to the right on this graph, the lower these numbers are, the more affordable a market is. So the more that your money will buy you. So, for instance, we'll just pick a random one. Rochester, typical home value of $171,000, median household income of $62,000. So that's a 2.8 value to income ratio. Why that's good is because the lower that number is, the less real estate values have to decline. Now you go further out on this list, right? Like we're getting to 7, 8, 9, let's a place like Los Angeles, 9.5 value to income ratio. So the typical home value is $740,000, median household income of $77,000. Well, that's just like a really stressed market in terms of its values. Has a lot of potential downside because people are borrowing a lot of money and there's a lot of leverage supporting those home values. The place to be on this graph is the top right, the affordable high growth category, because here we have low value to income, but strong growth. And you can see this is kind of a rarity. Most of the dots are in the bottom right. So most of the affordable places, the Rochesters of the world, are also kind of the low growth places. And that's part of the reason why they're affordable. However, there are a select few markets in this top right quadrant that combine affordability with high growth. And that's really a winning combination for real estate. And you can see this red dot is Atlanta. So its median household income is $71,000 as of 2019, according to the US Census. Typical home value is $261,000, 3.6 value to income ratio. So there's just tons of affordability and value in Atlanta, but there's still really strong growth. That is a tremendous combination. It's the perfect combination and part of the reason why Atlanta is my number one investment market for real estate. So let's go over that one more time. We got Denver, Chattanooga, Huntsville, Cincinnati, and Atlanta. These are the 5 markets that you do want to buy real estate in 2021. Of course, always make sure to do your homework, do your due diligence on any deal that comes across your plate. Just because these are 5 strong markets doesn't mean that every deal will work in these markets. So you want to make sure you do your own homework and make your own decisions. But investing in these 5 markets will put you ahead of the curve. Now, if you want to compare how these markets are to some cities that you should avoid buying in 2021, be sure to check out the video I posted a couple weeks ago on the 5 cities to not buy into in 2021. There'll be a link to that in the description. And of course, leave a comment, leave a like, subscribe. I want to hear your feedback. I always like hearing new recommendations for markets and videos to cover. So until next time, this is Nick from Reventure Consulting signing off.